From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. With a slumping stock market and a slowing economy, early retirees and people looking to retire in the near future, they need to make intelligent decisions to avoid jeopardizing a successful retirement. So here to recommend a few actions to make the transition into retirement as seamless as possible is our portfolio manager, Travis Dragan. So Travis, where do we get started?
Thanks, Jim. So the first thing a retiree or soon-to-be retiree should do is examine their own spending history, and from there construct a budget. Now, once that's constructed, they can make investments to help support that budget into retirement.
Yeah, and with bond yields back up and with high-quality corporate rates reaching as high as around 5%, one way we can help prepare clients' portfolios to create a bond ladder.
Right, and high-quality corporate bonds, if held to maturity, can provide steady income for households as they near or enter retirement. Now, it's important to mention that there are several different types of bonds, including corporate bonds, municipal bonds, or U.S. Treasury bonds, and they each can provide their own unique benefits to investors.
Yeah, for example, one of the advantages to municipal bonds is the tax status, since they could be exempt from federal, state, and local taxes, which helps minimize taxes during retirement.
Right, and during retirement, it's important to try to stay ahead of inflation, and one strategy to attempt to achieve that is to focus on dividend-producing stocks. For example, stocks that pay dividend yields in the range of 4% to 7% can help achieve that. It's important to remember that over the last 50 years, dividend income represented 40% of the S&P 500 index's total return over that period of time.
Yeah, and that's a lot. And companies that grew or initiated a dividend have experienced the highest returns relative to other stocks since 1993. So with the growth of $100 reaching actually over $14,000.
Right, and there's an additional benefit that dividend payments are taxed at often the lower capital gains rate rather than an individual's ordinary income rate.
Yeah, and there are also many other income-producing investments, including CDs, preferred stocks, and real estate, just to name a few. But the key is that your money will have to last you for at least the next 2 decades. So using different statistical models to build a plan, we're able to help a retiree define their sustainable withdrawal rate, including longevity risk as well as inflation.
Right, and as people are living longer, longevity risks are rising. So for example, from 1980 to 2010, the population aged over 90 has nearly tripled, and that's projected to continue to increase in the decades to come. So simply put, individuals need to plan for a longer retirement. And our strategies are typically tailored and customized for each individual and focus on 2 things. That's rate of return and rate of withdrawal.
Yes, Travis, thanks for joining us. Having a financial quarterback on your team to help lead the coordination of both good investments and a tax plan can help you with a successful retirement. So if you have questions or want to look at your retirement plan, give us a call. Here's Fox News Sunday.